All right, ladies and gentlemen, what is it, Tuesday morning. Welcome aboard our primary live trade brief here at Top Gun Options and day two of our industry-leading full throttle training and trading. We had an absolute blast yesterday, and we're going to keep that going here. We have a lot going on, a lot to cover, so let's get airborne. Okay, yesterday we knocked out the welcome aboard brief and some basics of options. And during the brief yesterday, or just in front of the brief, I opened up an S&P 500 sniper shot, closed it during the brief, about an 80% profit, approximately $2,300. I was on a roll in the brief to the new members, but I pointed out another snipe that my current members could take, and a bunch of folks did. And they also made about 80% and close to $2,300. So about $4,600 during a live trade brief yesterday. If you didn't get a chance to watch that replay, let me go ahead and give you the replay page. Everything that we're doing this week is posted, obviously, on the replay pages, and it is right here. Easy to remember, go.topgunoptions.com/FT. That stands for full throttle replay. So let me drop that in the chat box to everyone right there. Good job, Barry. Sandeep, I am doing fantastic, man. I'm as right as the mail, right? As Doc Holliday would say. How about Val Kilmer passing away? What a great dude. He didn't pass away. He transitioned. You guys know how I feel about that. All right. So right now we are in the primary live trade brief. Real quick reminder, as of me jumping on the air this morning, there's 19 memberships left. We're not doing the 50. I did a full throttle last month, and we got a nice group of folks. The only reason I'm doing this full throttle that close to this one is because some of you all have been blowing up our customer support saying, hey, can you do another full throttle and get my ass handed to me? I appreciate that. I appreciate folks being honest, like, hey, man, I thought I was pretty damn smart as the market was going up for the past 2 years on nothing. We call it the MacGyver market. Hope, bubblegum, and a straw. It's when the tide goes out that we see who's swimming naked, and Top Gun Options and people end up flocking here. So we're going to do some spread training today. And I'm going to show you, excuse me, how to potentially profit as the market goes down. There's a lot of potential bad on the horizon that we're going to talk about today, and good, right? Remember, go watch the replay from yesterday. How should you be when the market implodes? Okay. How should you be when the market has a rip your face off rally? Okay. If you're anything other than that, you're trading wrong and you're trading emotionally, right? Tomorrow I'm sorry, let me fix these slides right now. Did a little bit of a vote yesterday, and we're going to stick with 10 a.m., the morning briefs. I was thinking about doing some afternoon briefs, but let's just stick with 10 a.m. Let's make these changes live. So I'm not putting out fake news. You're fake news. We're going to talk about, we did a synthetic stock yesterday on Amazon, but we have some other ships we have to deploy. We're going to talk about the CBOE today, Chicago Board Options Exchange. You got to get bullish on CBOE. Raytheon. We are long-term bullish on Raytheon, sadly or not sadly. Why do I say sadly? Because I hate war, I hate death, I hate destruction. It should all end. Okay, that's whiz. Gordon Gekko, the Jordan Belfort in me, says, good. If there's going to be war, death, and destruction, we're going to profit off of it. I'm going to have to meditate and scrub myself of that. I can't even act anymore like somebody without a soul. That's why I couldn't stay on Wall Street, man. These people would push their own mother in front of a bus for a buck. Thursday, we're going to do Solo Amazon. Solo Amazon is not part of Full Throttle. It's its own separate standalone service. It's our gateway drug to check out what we do here at Top Gun Options. Only $97 a month, $970 for a year. Some folks start in there and then they end up upgrading, but that's why I booted it to Thursday. Okay, I already gave you the replay page. Quick reminder of our mission objective. I know some of our strategic partners mailed, for us last night to get some of you all up to speed on options. So let me remind you of my mission objective for this free week of trading. And let me remind you, I'm the only guy in the industry or gal who does this. Anybody else you're going to see gives you 72 PowerPoint slides with trades from a year ago or 10 years ago when they actually made money. I open up the doors to our regular member briefs. You are sitting in the primary live trade brief. If you're free, welcome. If you're a member, you're in a member brief. Okay. I'm the only guy that does this, but hopefully you paid attention yesterday with the synthetic stock on Amazon and you said, you know what? I can hang with that. I kind of get the concepts, right? But I'm going to knock out a quick intelligence brief this morning, and we're going to get tactical, and then we're going to turn panic into profit. Why now? We went through this all yesterday, man. If everything on that screen makes you a little worried, you're doing it wrong. When I look at that screen and I say, holy crap, that is profit. That is potential. When you make a mindset shift in your investing that says, I can turn all this panic into profit, you're done. You are on the other side. 4 years ago, when I sat with psychedelic assisted therapy and it changed my life, you know what? This little mindset shift, well, it wasn't little at the time. It was the monumental shift in my life was this. When I sat there, you can use whatever word you want to use. It was God. When I sat there with God and we took a look at all the trauma in my life, it brought me to this point. So I can actually today, for decades, I couldn't do something like this. I can find gratitude in my suffering. If you can find gratitude, any gratitude in suffering, man, you are on the other side too. I didn't expect to tie those things together, but this is why I love doing these live trade briefs and me just going. So we're going to turn panic into profit. Man, there's a lot of people swimming naked in this market right now. The panicins that, that was a new word that Trump came up with last week. People who are just frothing at the mouth. I can't stand Steve Leisman or the judge. What's his name? Scott Wapner. Eeyores. Last week, when Trump announced a 90-day pause and the markets actually rallied, some people in this country, Democrats, were furious that the market rallied. We're going to look and at insider trading now because the market went up. You wanted the market to keep going down and people to be in pain so you can score political points. I can't stand people like that. But these people are really rooting for bad. Anyway, if that looks like panic, you're doing it wrong, man. We have been profiting as this market has gone down. Quick reminder, that's from 2000 until today. Does anybody see a trend? Does anybody see a trend since 1991 where I started investing? You don't have to be a political science major from South Jersey to understand that things move up and to the right over time. We do get kicked in the belly every once in a while, and every belly kick isn't buying opportunity. If you're new, let me let me brief you. Do not ever be 100% invested in equities. You're an idiot. And I'm being polite when I say that. The people that are getting margin calls, the people that are like, oh my God, Trump's destroying this. I remind Top Gun Options members all the time, you better have some dry powder. Have some cash available for when, not if, when markets get hammered. Folks, this is a business cycle. Look at the up and to the right. Every once in a while, there's a slam. If you are getting wiped in a slam, you're failing. And you're probably not a Top Gun Options member. Between us ladies, I love the slams. I love the panic, and I come in and buy at discounted rates. So learn from this, right? Everybody sit there and go, you know what? That was me. Good. Roger up. You should be your own worst critic. In a fighter squadron, before I get into a debrief, that debrief starts, I fess up, man. Ladies, gents, this is what I gooned up on this flight. This, and this. What do you have for me? Then I'll turn it over to them like, hey, did I miss something that I screwed up? That's the culture you have to have. Trading is a form of combat, folks. So be your own worst critic. We stepped through this yesterday. I'm going to take out these pain points. I have to get you the trade plan. If you didn't download it, when you opted in, I'll get you that trade plan. I'm also going to get you an SOP, standard operating procedure. And we're going to talk about all this other stuff, right? Trading too large and taking the emotion out of it. Quick review, left side of the fence, solo Amazon and full throttle. We're focusing on full throttle Monday, Tuesday, Wednesday. I'll talk about solo Amazon on Thursday. That's the training environment, right? If you're ready to get airborne and literally throw some real capital, we have 2 investment clubs. The Hunters, you can join today. Max Afterburner is lifetime. We can talk about it some other time. That's a really elite group. Okay. So underneath the training umbrella, make sure you open a brokerage account with a broker that has a nice flight simulator, right? Paper trading, virtual trading, whatever it is. So you can practice not putting real money at risk. And then when you go, you know what, I'm ready to solo, I can put some real money at risk. So underneath full throttle, you get 7 options weapon school sessions. I just added the 7th one last week, my 2-4-6 sniper training. Okay. So options weapon school, building block approach right at the bottom. Options weapon school 7 is how I shoot those daily snipers. Now I got a couple emails last night. Yes, you need at least $25,000 in your account to do those sniper shots. Why? Because a government that's $37 trillion in debt doesn't think that you know what you're doing with your money. I want that to sink in. These idiots in the government are going to boss you around with your money. If you allowed me to invest what you steal from me and put into my Social Security account, I'd be a millionaire when I retired, a multimillionaire. I can't stand it, folks. It's not a whiz thing. It's an Uncle Sam thing. Just like you have to be an accredited investor to invest in this thing. You're going to dictate investing to me. Anyway, yeah. But today I'm going to show you, we're going to do a bullish trade on the CBOE out a month. So the daily sniper shots, you need at least 25 grand. That's about 25% of my trading here at Top Gun Options. 75%, if you don't have 25 grand, is you. We can do weekly trades. We can go out and do a 30-day trade. Yesterday, we did a 2.5-year trade. So if you don't have more than 25 grand, you're just going to miss out on about 25%. There's people who are like, man, when I joined you, I didn't have the 25 grand, and now I do based on doing the other trades. And now I can shoot my snipers. Okay. You get your manuals. We already covered this yesterday. Here's the normal flight schedule for the week. It's different this week because I'm doing a free week here. Normally solo Amazon is on Monday at 10 a.m. and then the other 2 briefs are Tuesday and Wednesday. Solo Amazon is not part of Full Throttle. You can go to Trustpilot. You can check all this stuff out on your own. Don't listen to me. Listen to current members or former members. We know what we're doing. Okay, quick reminder. Look, that only is going to take 15 minutes. I love it because we got 45 minutes of good stuff. Investment to get airborne. Right in the middle, folks. 90%, 95% of our current members are in a Full Throttle max. With the 2 trades we talked about in the brief yesterday, I paid for a 1.5 years of an annual membership. Okay. I paid for 5 months of the Hunters. What's the difference between those two? The thing on the right, the Hunters, is you being a tire kicker. I want access to the Hunters Whiz. I want that phone app. I want the instant alerts. I want access to that investment club. But I'm trying it out for a couple months. Okay, great. That's you on the right. If you're like, I'm already ready to go, let's do the annual membership. That's you in the middle. And you save 50%. Me as a businessman, I want you in there in the Hunters for the rest of your life. That's as a businessman. As Wiz, don't do that. Stay in there for a couple months if you're still kicking the tires and then upgrade to the annual. Over on the left, folks, that's the true tire kicker. You do not get access to the investment club or the Hunters. That's the kind of trial, so to speak, if you want to keep kicking the tires. You get access to the live trade briefs, the options weapon school, the manuals, all that type of stuff. You do not get access to the Hunters. Any questions on any of this before we get airborne? Yeah, we did. We did the 5-year trade on the S&P 500 last week. It's already up like $3,000. Do you remember that? Ben, how do we get to this page with the sniper methodology? What page? This is a sales page. If Rick's asking how to join, here's the link to join Full Throttle. And that was 2 buzzes. So there, what's that? 17. There are 17 memberships left. When you hear my phone buzz, folks, that's people grabbing their memberships. So let me give you the link. You just scroll down to this page, whoever just asked that. The 5-year trade, folks, we did on the S&P 500 last week is already up like, what is it, $3,000 since last week. That trade, ladies and gentlemen, potentially is a 6-figure trade. What did I do? I'm not going to show you the trade you need to join. I went, look at this. I'll tease it a little bit, but I give way too much shit away during our full throttle week, man. I'm not a charity. I run a charity, and that's why I need money because we need to throw it over the fence. Look at this. You can go out. Let me delete all these front months things. I am based on those slides that I just showed you. Since I was a 21-year-old ensign at Naval Air Station Key West, right? May. Delete the May. Here we go. Ladies and gentlemen, look at this. Sit up straight. Right now, we can go out to December of 2030. That's 2,075 days in the future. If you believe that we're going to do this up and to the right thing, and 5 years from now, you're going to look back and say, man, do you remember that last deep pullback? Woo, I got bullish on America. The trade that I covered last week, folks, what was it? We came out of pocket like $5,000 or whatever it was, could potentially make $300,000. There were current members saying that's a college fund trade, or that's my retirement trade. You got it. For a little bit, and one more time, I'm not going to pull up the PowerPoint slides. If you think in 5 years from now, the S&P is going to be wherever my strikes were that I picked, you can join and go look at the trade. I'm not going to give it to you. You could potentially make 300,000. One contract, ladies, I think I did 3 or 4 contracts. If I did, it was 4 contracts, could make $300,000. The one contract trade was what? It was like $1,500, could make $100,000. Investing $1,500 today in that S&P 5. I'm glad somebody asked about this. I forgot. Why? Because when I put a 5-year bullish trade out into the future, it's down in my filing cabinet. I set it and forget it. I believe, love or hate President Trump, he's going to succeed. And it's amazing to me that people in this country are rooting for the market to go down and people to fail. So I'm going to tell you, if you join today, that it's going to rip. Okay. I believe it's on the primary page, folks. It's on the member pages. So, and I current members who are looking for that, I send out an email afterwards, and it's posted in the Hunter. So please go. I'm not going to take time right now. It was last week in either primary or accelerated. I think it was an accelerated retirement trade. But we gotta press forward here. So, Jeff, where was it? Please tell everybody. Oh, somebody's asking about where the sniper training is. You got to join, folks. Underneath learning down here at Options Weapons School. And I was going to shoot that damn bear sniper. See, I got on a rant. I got happy about the long-term bullish S&P 500 trade, and we should have shot a 54.75 sniper. But I don't want to snipe in the brief today for the people who can't snipe. That's enough. It's right down here. Options Weapons School 7, S&P 500 sniper shots methodology. Look at that. Hopefully my current members already knew to do this. You see that rollover right there? This was beautiful. That periscope up to 54.50, 246, fire. That would have been a bear sniper, but I got to get going. Any other questions before I get going? Because I only wanted 15 minutes of kind of admin stuff here. Awesome, Jeff. In the Hunters 5 days ago. I love it. Sandeep, you got to join, buddy. You got to join. If you want access to that trade, that can make $300,000 if you do 3 or 4 contracts, or you can do 1 contract. Folks, long-term bullish on the future. All right, let's go. I gotta get airborne. So we're going to talk when we get tactical. Remember SOT, strategic, operational, tactical. This is the flow of my live trade briefs. We're going to do a quick strategic brief, then I'm going to get operational, and then we're going to trade and get tactical. My back channels, the Iran nuke talks are going exactly. Why do I care about the Iran nuke talks? Because if you wake up and the futures are down 3,000 points because B-2 bombers out of Diego Garcia are pounding Iranian nuke sites along with Israeli F-35s, you're an idiot that you didn't listen to me. In Top Gun options, we look strategically, then get operational, and then we trade. So just because everybody on CNBC is frothing at the mouth about interest or the 10-year and stocks this and earnings that, doesn't mean this isn't going on. From what I understand, the Iranians are trying to slow walk it so they can get the nuke finished, right? So in the middle of negotiations, they can go, ha, too late, we already have one. And then I'm hearing that Trump is already being mealy-mouthed about it. Like, well, if you throttle back to only 60, whatever the percentage was, 60, 65% of enrichment, well, we can call that a victory. I think he just stuck it to Netanyahu. I don't know how many times, if you took a shot, which would make my skin crawl every time Netanyahu said, we will never let Iran get a bomb. I don't think there's too much wiggle room in that. So this is on my radar, and this is on my 30-day out from now radar. Donald Trump sent a letter to the mullahs on March 7th that said, you got 2 months. This is a big effing deal. Ladies and gentlemen, bank trading desks are minting money. I say printing money. So the Wall Street Journal reporter who's a member here changed my words a little bit. Bank trading desks are minting money. From what? The chaos. That sounds like us. We are printing, not minting money based on this chaos. Bank of America reported this morning, I have a long-term synthetic stock bullish position on Bank of America. This is a screaming buy. I have a long-term bullish position on JP. Look at that, 4% pop in Bank of America. Let's go, baby. Look at all of these. Bank of America bottomed out. JP Morgan printed money the other day right here in their earnings. Look at that. We are filling the gap, ladies and gentlemen. And then the financial Death Star, Goldman Sachs printed money. Look at, they all look exactly alike. Buy the financial stocks with both hands. In my model portfolio, I have long-term synthetic stock positions on JP Morgan, and there's my JP Morgan position and Bank of America. Okay, so the answer is yes. I would do that on this. I'm bringing this up because this is great news. If you're not familiar with Dow theory, financials and transports tend to lead us into good and into bad. Financials, ladies and gentlemen, and transports are the canaries in the coal mine. Your FedEx, your UPS, your Goldman Sachs, your Bank of America, that's the heart. If the banks and the financials are imploding because America's imploding and people ain't shipping stuff, I'm not buying the G.I. Joe with the Kung Fu grip for my nephew's birthday, it's very bad. So seeing these financial companies is a good thing. Now, let me couch this a little bit. They're printing money on what? Trading. Doesn't necessarily mean they're printing money on what they usually do, right? I'll meet you at the strip club where we'll talk about this $20 billion acquisition. They're not doing old school, or I'll meet you at the Masters and we'll close this deal. They're printing money on the chaos, right? So I'm going to couch my super bullishness just a little bit. But hey, guess what? If they're printing money on chaos, they're printing money on chaos, Wiz. Precisely. So yes to Bank of America, yes to JP Morgan, yes to Goldman Sachs. I have Bank of America in my personal account and JP Morgan. In the model portfolio, we looked months ago at getting bullish on Goldman Sachs. I would absolutely do that. Bank of America's profit climbs with consumer spending resilient. Whoa, hold on. I'm hearing from the liberals on CNBC and CNN and Bernie Sanders and AOC, please, God, I'm begging you, please run Bernie Sanders and AOC as a team in 2028. I'm begging you, I'm going to manifest this. Or Spartacus and AOC. Oh my God. Anyway, you're being lied to. Shocker. The consumers, things have been crappy for a while, folks. It hasn't gotten more crappy. For 4 years under Joe Biden, we were gaslit. The economy's great. Everything's great. What? It isn't. Well, if it isn't, it's just for you. Everything's great. What? Don't believe your lying eyes, Wiz. We're telling you the truth. Okay. So the consumer doesn't look too dead, according to the banks. Again, these are the canaries in the coal mine I'm going to teach you to look at. China limits stock sales. To maintain impression of stability. Bessent, our Treasury Secretary, has said what? Hey, guess what? If the Fed ain't going to act, I can act. And it's so funny to see the liberals. Who's the guy? Where was it? I got to show you my what I said to this guy. It's so funny. Right here. Treasury Secretary Bessent, who took a dim view of his predecessor's debt issuance policy by alleging it inappropriately influenced financial conditions, said Treasury could increase their buybacks if needed to stabilize markets. Guess you missed the if needed. The only reason Janet Yellen, the previous Treasury Secretary, needed it was blowout spending by her party and a Fed printing money out of thin air. This Treasury Secretary is trying to fix all of this. Let the man cook. Isn't that funny? So these people come out of the woodwork like, aha, well, he said he could do this if things get worse. If needed. Janet Yellen didn't need, well, I guess she did need it because of her boss, Kamala and Joe, doing stupid shit. So it's so funny. But anyway, let's get back to this. So let me give you the summary from this part of the intelligence brief. There's a Trump or Bessent put under the market. If the 10-year keeps, wouldn't this be great if you could do this in your own home with your printer? Just print money out of thin air. I don't want this to happen. I want shit to burn. I want Trump and Bessent to destroy some things. From the ashes will rise a phoenix. Ladies and gentlemen, we're going to talk about the CBOE in a couple minutes. I was in the CBOE. I was at the Options News desk. I started the Options News Network. In 2008, with the financial crisis, I said, let it burn. Do not bail out Wall Street. Oh my God, Wiz, everything's going to fail. The sun will rise tomorrow. Yeah, but AIG, it's financial Armageddon. Good. If the government needs to bail out capitalism and markets, it's not capitalism and markets. And then for the next months, I had to weave through Occupy Wall Street hippies. They ended up being right. Why the hell would you bail out Wall Street? Anyway, here's what I'm getting at. I don't want him to do this, but you can sit there and go, okay, the Treasury Secretary saying, I got this. I don't want him to have it, but he has it. Does everybody understand that? This is a long article, but ladies and gentlemen, the national team, right? China's plunge protection team has been buying ETFs like crazy. They are propping up their stock market. So right now, they're the battleship Yamato, and we're the New Jersey. We are pounding each other. We will win. They don't have the ammo to do this, folks. So, and they are doing what? Their brokerage firm, they got the email, folks. You're not allowed to sell, and you're not allowed to short stock. Do you remember this? I remember, when was it? 2015, the last time China imploded. They threw 200 financial journalists in jail for writing bearish articles. I remember this, folks. Do you remember that? I do. Short selling is hereby outlawed. You can only buy stocks. Oh my God. So the only reason China, let's go look at the FXI real quick. The only reason China ain't at zero right now is the plunge protection team jumping in to save their markets right now. This is the FXI. Look at that. This is the iShares China large cap ETF. I failed, guys. I failed you. I should have, when this implosion happened, I should have said buy it. Or did I? Like 3 weeks ago, as this started to chop, I think we came over here and looked really quick. Look at that. You could have gotten this thing at 29 and a half. You could have made $5 by now on the FXI. Now, and it went up to rate where? Here's the gap. It filled half the gap. If it hovers and ticks up, buy it. It's built on bullshit, Wiz. I don't care. If the Chinese government, at least I'm talking tactically, don't get long-term bullish on this yet. I mean, like a 30 days out bullish type of trade. Because I'll give you this link. Read this. So China, ladies and gentlemen, is jumping in to try and save their stock market. Okay. Read that one when you get a chance. Okay. I said I was going to do a better job at looking at the questions here. Zoom. Jeff, did you figure out? Okay. Other Jeff. Good. Awesome. I appreciate that, Mitch. Mitch has been here for years, and he's printing money. I love that. Okay. Let's keep going. We got to get tactical. I joked about this yesterday. I can get rid of it. It really does look like the gang who can't shoot straight. Navarro, Lutnick, Besant seems to be the adult. Let the hedge fund guy talk. I know Lutnick was I forget, where'd he come from? I forget. Never mind. He's a Wall Street guy, but he's a clown Wall Street guy. Same thing with Navarro. I think Navarro was a Harvard academic. I don't think that guy really did anything. Don't let them talk. Let the Treasury Secretary, let the man who holds the job that Alexander Hamilton held talk. It's markets like him better than those two bozos. One more time, I got to remind you, folks, it was a missed story at the end of last week because of what? 90-day pause. All right, rip your face off, rally. Inflation eased. One more time, I'm going to remind you that I was, for the past 5 months, as inflation was going up, I'm like, whoa, the Fed might have to raise rates this year, folks. I said that. What happened? It's going down. Inflation is going down. Where's all the Democrats with the inflation and don't you care about the price of eggs? They've already moved on to the next thing. What's this? Oh, as we start to get tactical, yesterday, about 8 minutes before the close, somebody sold $2.3 million of puts. Now, if you're new and you don't know what that means, that's an insurance policy, right? We talked about this yesterday. When you buy a put, you're bearish. It's going to implode. Somebody is on the other side of that trade. It ain't going to implode, dude. I'll sell you those puts. Somebody sold $2.3 million of puts yesterday at the close. Tesla's earnings are next week. Somebody on the 22nd, somebody thinks that Tesla ain't going down and it's going to have some good earnings here, folks. It's scooping along a tree line here. If they report good earnings, that trade will print money. This is why you're here too, man. I'm going to show you unusual options activity, but this is either somebody hit a keystroke wrong, they were drunk, or somebody, well, let me say this. Somebody believes or knows that earnings are going to be good. But this is dangerous, man. I've seen companies report good earnings and the stock go down. So you got to be careful with that type of stuff. That's why, I know John and Pete Najarian, they're a remora fish on a shark, right? They just kind of watch unusual options activity. Hey, somebody just bought $1 billion worth of these strike calls. Folks, I was at a multi-billion-dollar volatility arbitrage firm. We did that every once in a while to smoke people out. Okay, so the whole following unusual options activity ain't necessarily what they are okay. Whatever. I already made fun of Dalio yesterday. I don't need to do that again. All these panicins. We laughed yesterday at the Bill Ackman. Every time he rants, the market bottoms out. Every time he he wanks like a stuck pig. All right, here we go. Let's get tactical. So as you can see, man, markets are trying to stabilize here. We're climbing out of the Trump trade bottom here, right? So this is technically significant. You see this for all the new folks. This green line right here is the 20-day moving average. We're at 54, what's that say, 69 or whatever it is, 59. You got to join, folks, and watch my 246 sniper training. The S&P 500, let's go look at it. This is why I have all my lines like this. Moves in $25 increments. Look at every movement of this thing. Every one of these white lines, I put these in here, is look at today. It's a $25 move. We opened, we went up to a 50, we went down. You see that drill bit right there to 5,400. Now we're back up to a 25. This, and I'm giving you a little my sniper training, and I'm going to stop. But what I'm saying is, this is technically significant, is that we're hitting this 20-day moving average. That's, if we pop through it with some airspeed, it'll be bullish. If we fail here, it's probably a leg down and bearish. So I'm going to keep my eye on my other screen over here, and we'll keep pressing. Okay, so let's get tactical. The first trade I want to cover today is CBOE, Chicago Board Options Exchange. This has been and will print money. I don't have the time for all the new members to give you my full commit criteria, but going through our step 7 trade plan, I am bullish on CBOE. My commit criteria is, sadly, what do you mean sadly? You're bullish on something, you're using the word sadly? Yeah, sadly, CBOE will be moving to 24-hour equity options. The whiz fighter ain't waking up at 3 in the morning to look at his phone. It sucks. I'm not going to trade those options, whatever. Now, not sadly, so that's whiz talking. Let me talk like Jordan Belfort or Gordon Gekko. Good. The CBOE did this to open U.S. equity options to Hong Kong, China, Australia, people on the other side of the clock. It will print money. They also, folks, this is a recession-proof trade. When I look at a chart like this, the first thing that I think of is CBOE. Why? Because the options trading goes through the roof. I guarantee you, based on the Q1 insane tariff war market moves, when's earnings formally? May 2nd. They most likely, I don't know 100% certain, will print money and have a great earnings, okay? So May 2nd is literally earnings, all right? So let me teach all of you a little bit of a trick here. If you're new to options, I'm going to step you through how I pick strikes, okay? Why does my phone keep, oh, like, is somebody calling me? So that's probably about 15 memberships. Okay, good. Sweet. Okay. So here's what I'm going to do. Right now, the CBOE is priced at 217, right? The 217.5 strike right there is pretty damn close to at the money. I want to take a look at what the options market thinks this stock is going to be moving at around May 2nd. You can see that? Yeah. Let's do some quick mental math. Right now, the calls are priced at what? About $6, I'm going to round up, $6. The at the money calls, you go between the bid and the ask. Just do some quick mental math. Let's say 6. Now the puts, the at the money puts, are also about $6. Add those together, you get $12. Right now, the options market, not Wiz, the current pricing, as soon as I said the word pricing, and now it just changed because pricing moves, this will give us a rough estimate at what the options market people are saying. So I'm going to click on this, the at the money put, and then I'm going to click on something called straddle. Okay. The at the money straddle for May 2nd. What did I say? 12 bucks. It's at 11.60. Yep, nailed it. So what does this mean to folks that are new? I'm going to click on a picture right here and just look at the, okay, and of course the strike prices went away when I did that. Straddle, sell to May 2nd. Okay. Now, look at this little green teepee, the Elizabeth Warren teepee right here. That green is what the options market is saying it's going to stay between. The high that the options market is saying it'll stay below 229. Let's just round up. And it will stay above 206. Now that I looked at the options market pricing, let's go look at those strikes on the chart. What did I say? The top would be 228. Wow, which is all the way. So 228 is right there. It's where we fell off the cliff. Where's the bottom? 206. 206 is right there, essentially where we bottomed out. Isn't this cool? So I'm using a little bit of technical analysis. 206 is right down there. And then 229, 230 is up here. Okay, so the options market pricing told me. With what degree of certainty, Wiz? Probability? 64%. That's nice. That's a 64%. It ain't a coin flip, right? So now that I have this, I can start looking. I think they're gonna hop on earnings. That's what I'm thinking. Let me lead with this first. Wiz, earnings is gambling. I've heard you say this before. Excuse me. Meaning what? I've seen stocks report great earnings and the stock go down. I've seen stocks report shitty earnings and the stock pop. Precisely. Earnings can be a form of gambling, folks. Why would they report good earnings and the stock go down? It's called the earnings call, folks. Earnings calls are 80-20. What do I mean? 20% of an earnings call is, this is how we did last quarter. And then 80% of the rest of the earnings call or report is what? The forward guidance. So let me give you an example. We had a blowout first quarter. It was insane. And you'll usually see this in before market or after market trading when a company's announcing this. Like, yay, stock's up on, they printed money last quarter. And then the CFO just said they might go out of business next quarter because everything sucks. And the stock's down 10%. Okay. So that's why this is why some retail traders hate Wall Street, right? Like, Wiz, I got bullish on CBOE in the earnings and they had great earnings and it went down. Stocks go down for a reason, folks. So I just want to couch that. Step 0 would be, Wiz, I ain't going to gamble. I would rather, Wiz, do what you did. Not be tactical and fly all the way out into the future. And you can see on my screen right now is my personal existing position. I have synthetic stock at the 200 strike in CBOE. So step 0 would be do nothing. Step 2 would be, you know what? Wiz is right. I'd prefer to be long-term bullish on CBOE as far out into the future as I can, January 2027. Look at the 10-year. Does anybody see a trend in CBOE? When I said to buy it initially in the COVID crash, look at that. If you listened to me and bought it in the COVID crash, where's this stuff? Let's go. Just move this up. It was, oh man, I moved my date. It was right around there. You made 213% on your synthetic stock. That would be a 6-figure trade. You're welcome. But look at the trend of CBOE. As options trading gets even more and more popular, the CBOE explodes higher. Step 0, do nothing. Step 2 would be to do a synthetic stock all the way out to Jan of 2027. Step 3 would be, let's look at a bullish trade on earnings. The bottom was what? 206, I said. Let's look at selling. I'm going to go slow for all the new folks. Wiz, you looked at the at-the-money straddle. You looked at the chart. I don't think by May 2nd, CBOE's below that low. Okay. You could sell a 207 put. That's the basement. You're putting a basement underneath CBOE at 207 and a half. But you can't do just this trade because this is what is called a naked put. You would need a ton of cash to do just this. So we're not. We're going to buy a lower strike put to hedge the risk. We'll do for now we'll buy the 205 put. Okay, let me look at the risk to reward on that. Nope, we're going to have to go higher. Let's look at and of course, the options pricing right now on E-Trade. They sent out an email like, during high activity, our pricing might be off. You think? Okay. So this is not making sense to me. Unless the bid ask is just that wide, which I don't believe. Is this updating? Let's go take a look at the SPX and make sure we're moving, that I'm airborne and things are working. Today, 1 minute. Let's take a look at the options pricing in SPX to make sure things are moving on E-Trade. It's today, the 15th. See how it's loading all slow like this? Okay. It should not be doing this, folks. Let me look on this screen over here to make sure it's not this computer. Nope. On my other computer here, the strikes are loading slowly. That's two separate computers. All right. Let's try again. 210, 207 and a half. All right. We're waking up a little bit here. There's not that much premium in that. I'm not trusting the options pricing, folks. It's a pretty wide bid ask here. All right, let me just explain what I'm doing real quick as I get settled here. With CBOE, the bid ask, right, is pretty wide. You could drive a truck through this thing. To get any sort of premium, we're going to have to go up to the 212 and a half, 210 put. Okay, so let me just step through this trade. I'm going to sell a single. Why am I selling one contract? Because folks in here, some people are multimillionaires, some people have 10 grand in their account. I just show the one contract, and then you, based on your portfolio, need to scale up or down from there. I'd sell a single May 2nd, 212 put. I'd buy the 210. Right now, my screen, and other people can share their pricing with me. Okay, Ben, you're seeing that too? Okay. Yeah. Yeah, Scott, I'm going to talk about that in a second. You can always buy the rumor and sell the news too, but let's finish this right here. So let's talk about the bad. Now I'm stepping through my trade plan here formally. 75 cents. We are getting paid by the market 75 cents or 75 bucks for one contract. Let's talk about bad right now before we go any further. I'm a political science major from South Jersey, folks. I need simple math. Double that credit that you're getting paid. Okay, that's $1.50. Write down $1.50 on your trade plan. Why? Because that is where I would maybe eject out of this trade. Eject meaning close it for minimum loss. Let's step through this real quick. You're getting paid 75 cents to do this bullish trade on CBOE out to the earnings date. That 75-cent credit you want to keep. If CBOE starts going down, that credit is actually going to increase, which is bad. When you sell something, right? If I'm a used car salesman and I sell a 250 grand Porsche to a guy going through a midlife crisis, when I sell that, and he pulls out of the parking lot, I like it. It depreciates. If he does a U-turn and comes back in and says, my wife or my life partner told me to sell this. Can you buy it back? Yeah, man, I'll buy it back for 200 grand. When you sell something, you want it to go to zero, right? So write down $1.50. If CBOE starts tanking and it hits $1.50, I would maybe eject out of the trade. Why do you say maybe, Wiz? Because I'm not in the future right now. I've given me a point where I need to make a decision in the future. I didn't say automatically eject. Listen to me when I say this, folks, because some new folks every once in a while will do what? It hit $1.50 and I bailed, Wiz. Why are you still in it? I never said eject at $1.50. I said maybe. Why? Because if or when in the future CBOE goes down a little bit and it hits $1.50 in a credit, I scratch my chin and I go, let me evaluate if I should bail right now. No, CBOE is getting hammered with the overall market. I still think it's going to report blowout earnings. I'm staying. Everybody give me a vertical head nod that you heard this. Every once in a while. It doesn't happen too often. Somebody will say, dude, I bailed out of that trade. You said to eject. I ain't telling you what to do, man. I'm saying I would maybe eject. Do you understand me? Everybody give me a vertical head nod. You are the tick, folks. You are the trader in command of your portfolio, not me. Yeah, it's CBOE options aren't. It's so funny because CBOE it's the options exchange. That's where options are traded. Their options aren't super traded. It's funny. Okay, does everybody understand that? Okay, now I haven't even talked about the good, and we're done with the bad. I know where I might eject before this trade expires. Okay, I haven't even placed a trade, and I know that. I'm grabbing a screenshot right now to give to my members, 415. Now, we're going to do an exercise. You ready for this? When I click on this snapshot analysis tool, I want all of you, my current TGO members will do this. If you're not a TGO members, and I didn't tell you to do this, you do it wrong. I want you to look at one thing and one thing only. The sad face. 3, 2, 1. Max loss. If I didn't tell you to do that, the majority of you would have went to max profit immediately. Hey, I can make 70. Stop. Do not ever do that. We're going to talk about managing risk. As the tick, the trader in command, you need to look here first. If you're not okay with losing $178, why would you look here first? I don't want to lose that, but I want to make that. Well, you can't. You, as the trader in command, need to put a check mark there and go, okay, I'm writing that down in my trade plan, which I'm going to get to you. I have blank trade plans, folks. I don't do Excel sheets or work docs. These people have these cosmic. I'm old. From standing on the floor to, I'm a written trade plan guy. Why? Because 2 weeks from now, if CBOE's going down, I can look at my own handwriting and say, I wrote that down, man. You wrote that down and said maybe eject. On an Excel sheet or a Word document, it doesn't have the same impact to me. It's like ones and zeros. That's my chicken scratch. I said I'd do this. Okay. All right. So once you say, you know what, Wiz, I acknowledge that risk. Now you can look up here and say, all right. Now, with this tactic, folks, is called a bull put spread. I'm bullish. I'm using puts, and the strikes are spread apart. You're getting some spread training right now. Okay. It's also called a credit spread because you're getting paid to do it. And it's also called a vertical spread. This is another reason why some people get confused in options. They're like, there's so many names for things. There are, because people like using all the different names. Don't. It's a bull put spread. Yeah, but Wiz, it's a credit spread. All right, booger eater. It's also a vertical spread. Shut up. It's a bull put spread. You can call it whatever you want, but let's not confuse people. It's 3 sentences for the same thing. Now, we make money 3 out of 4 ways with this trade. What? Yeah, you heard me. You see this dotted line? That's the current price of the CBOE as I'm talking to you. CBOE goes up, we make money. The CBOE hangs. It just stays there. It doesn't move for the next 3 weeks. It just hovers. you make money. Folks, we can even make money if it goes down. What? Yeah, as long as it stays above that price, which is called the break even. The one way out of four that we lose money is it implodes and you don't inject. That's your fault. Okay? This trade makes money 3 out of 4 ways. All right. Now, 7, 8, 9. If I, ladies and gentlemen, am looking at a 70 or 80 or 90% profit on this credit that I take in, close it. Pigs get slaughtered. Do not, and if you're new, you will do this once, you'll be miserable and you'll never do it again. Do not turn a 70, 80, 90% winning trade into a 100% loss. It sucks. I've done it, thankfully, decades ago, and I never wanted to do it again. I think I was golf. It was like a Friday. I forget what trade it was, whatever it was. It expired that day, and I had like 200. It was like a 90% winning trade. I'm like, I'm going to squeeze out the extra $200. I'll buy drinks at the clubhouse. In the clubhouse, I found out that whatever news came out, the stock tanked, and I turned a 95% winning trade. In order to scoop up an extra $200, I lost like 3,000 or whatever it was. I was like, oh my God. Do not do that. Write down on your trade plan right now your exit. I haven't even placed the trade, ladies and gentlemen. I know when I'm getting out for minimum loss or my maximum profit. Everybody give me a vertical head nod that you understand this. If you're a squeezer, I'm going to squeeze out that, a couple hundred, you will get to, it might work for you a lot of the time. And then the one time it doesn't, it's going to wipe out all the times that it did. I guarantee you. Do not take a max loss, man. It'll make you miserable. CBOE. Today's date, 4/15. Okay. Any questions on this? Now, I know I have members in here like, hey man, show me what the your SOP is. On a model portfolio worth $100,000, folks, in a normal market, I don't like risking more than 5%, $5,000 on any one trade. Why? I've done that. That's been my SOP for a long, long time. It's enough money. I'm not going to get blown out, in a volatile market. I throttle that back to 3%, or you can do 2.5% if you're not good at math like me. Does everybody understand that? Now, I can share this with you. SOP mindsets, right? So where am I right now with my SOP? I'm over here in volatile land. Smaller trade size. Yep, 3%. I take profit at 70 or 80. This is with credit spreads. When losing more than 50%, hey, is my commit criteria still valid? Yeah. So this is I can share with you. Well, I'll tell you this. If you join, I'll share it with you. If you don't, I'm not. Too much free stuff. So ladies and gentlemen, that's my SOP. So for this one, based on 100, and folks, with the $100,000 model portfolio, I only have 25 to 50 grand deployed. That other, 50-ish is dry powder that I have been kind of dipping into a little bit to add to my longs. For that model portfolio, let's just use, I don't know, let's go 35 contracts. Ooh, way too much. 20. Perfect. You risk about $3,700 to make $1,300 in what's that? 3 weeks, couple weeks. So for the folks, that yesterday when we did synthetic stock yesterday, but the sniper trades I need more than 25 grand in my account. You don't for this. This is a longer dated trade that anybody can do. Okay, what? All right, let me so we're going to share this. I got to get the alerts out. So if you're not in the brief, you're going to get this alert as a member, not a free person. New CBOE earnings bull put spread. May 2nd. May 2. At everyone. When I at everyone, everybody in the hunters gets an alert. Wait. Warning. Earnings are extremely risky. Earnings trades are extremely risky. I think CBOE is going to print money based on Q1 volatility. So let me, as I'm pasting images in here, let me remind everybody. I said what? Step 0, do nothing. Step 1 would be, you know what? Good looking chart. I believe, Wiz, that options trading is exploding. I'll do the synthetic stock. Step 2, synthetic stock and the the bull put spread. The bull put spread. All right, so let me grab that. So this goes out to the hunters, fired, and then our lifetime group, trade alerts thread. CBOE earnings May. Oh, there it is. Okay, there we go. Then I have my apologies. We're going to go a little long. It's usually only an hour, folks, but I had to eat 15, 20 minutes of marketing. And it's funny because it should sell itself, right? Shouldn't have to sit there and repeat that. But yeah, I think that's a couple more went during our brief. So we will close. You're not going to join. You're not going to be the 26 full throttle member for this one. I guarantee you. We will close the doors. All right. So, and if you don't know how to do synthetic stock, that's session 6 in the options weapon school training. I went through it pretty quick yesterday. Why? And let me remind you, the options weapon school, you need to be up to speed because in the live trade briefs, I'm not talking through synthetic stock for an hour. You already saw it in the training. I'm applying it live. What did I tell you yesterday? What do you need to be a successful trader? A plan, our trade plan, 7-step trade plan, right? You need practical application, which is this, but you need the training. The 3 things you need to be successful: a plan, the training, and the practical application. So why'd I get on that little tangent? Because you should go watch the synthetic stock training and do synthetic stock on CBOE, period. Men lie, charts don't. Right there in the COVID crash, I said, buy this thing, man. The panic, CBOE prints money on panic. And it never looked back. It's a 213% return since the COVID crash. You're welcome. All right. Why the pause? Because I'm looking at the time and I want to get some sort of hedge or tredge on in case we fail here, in case Trump, the trade war gets worse or the real war gets worse. But I don't want to super squeeze in here and have the training suffer because of it. Let's go out to, you know what? I'll do half of it. How about that? I'm going to do half of it. Let's go out to, technically, like I said, he gave him a May 7th deadline. It sounds like he's, I don't know if we're art of the deal in here. What do I mean by that? Art of the deal says you open with a broadside. He did that in a trade war. What did he do with Iran? He opened with a broadside. I'm going to bomb you in 2 months if you don't get rid of your nukes. Netanyahu. Yeah, what he said. Us too. Now it's, well, maybe, just step down a little bit. And, I don't mind having, so let me talk through my terminology real quick. Many of you are familiar with the word hedge, and 95% of hedge funds are not hedge funds. What do you mean? Like Bill Ackman, my Pershing Square capital is longs only. And then you're not a hedge fund, dude. Stop calling yourself a hedge fund. A hedge fund, by definition, is what? Hedged. How many times I got calls from buddies in Greenwich, like it from their long only fund from the golf course, like, hey man, what's the whole put things? How do I got a shitload of this stock and I'm a little worried. Okay, you're not a hedge fund then. Anyway, I don't mind losing money on. Let me say this again. When I place a hedge, you ready for this? I hope it loses money. Did this guy in an investing brief just say something hope loses money? Yeah. Did I ever get out of the F-18 and look at the ejection seat and say, I can't believe I didn't use that? What are you, dumb? How many of you, I don't do this anymore. In the old days, before automatic debit, I'd sit down every month with my Navy Federal checkbook and write a check to USAA for my auto, home, and life. Do you think every month I went, now it's on auto debit. I don't even know I'm paying insurance. If you're weird if you sit there and go, I'm losing money on insurance. I guarantee you that's when God or the universe says, okay, now you just rear-ended somebody. So a hedge, it's like a bilge pump, folks. I don't mind the bilge pumps working. Do not look at a hedge as losing money. If you have a lot of long-term bullish positions right now that are getting hammered, it's the cost of doing business. I hit this yesterday. Insurance. You insure your auto and home, and most of you don't insure your portfolio. I don't want to hear about your 401k that's a 201k. That's your fault. Hedge. Now, a couple years ago, I came up with a term called Tredge. When I place a trade, so a hedge is over here, a trade is right here. I do not place a trade with my hard-earned money that Uncle Sam is letting me keep, and I think it's going to lose money. What am I, stupid? I never place a trade that I don't think is going to make money. I absolutely place a hedge that I don't mind if it loses money. Let's squish those two concepts and words together into what I call a tredge. It's a trade that I'm pretty damn sure is going to make money, and it will serve as a hedge to protect my long-term bullish positions. Do you understand this? In this example, it would be, you know what? I got a lot of long-term bullish positions. I got CBOE, Bank of America, Amazon, JP Morgan, and some psychedelics that we're going to talk about tomorrow. I don't know, man. Wiz, we got a dead cat bounce here. Implosion, dead cat bounce, implosion, dead cat bounce, super implosion, super dead cat bounce, implosion. Woo. If that happens, my longs are going to start getting hammered again. So I could look out to May 7th. Doesn't sound, I can be completely wrong, folks. You guys know Donald Trump as well as I can. The guy can change his mind in a minute. So you got until May 7th to get rid of your nukes, or I'm going to do it for you. Yay, I'm right behind you, Trump, said Netanyahu. Talks are going okay. Maybe if you just throttle back your uranium enrichment, we can. I love a deal. I want to be able to be in the Rose Garden and say, I got a deal. The Mullah's great backswing. Going to invite him to Mar-a-Lago. So, however, this Tredge that I'm going to at least start building today can cover that in case I'm wrong. He woke up angry and he's bombing Iran. Okay. Or trade war gets worse. Okay. We were definitely oversold. This was easy. We weren't going to all die, folks. Every time, if I had $1 for every time I heard this implosion's different, I'd be Elon Musk. No, it isn't different. It is different because it's based on this, but every market pullback has been a buying opportunity. We were oversold now, and I'm just going to do some rough math. I think we're at like half the gap. There's our implosion. The market is literally hitting resistance at what? Implosion, half the gap. What was that? Oh, FXI. Excuse me. FXI looked like this implosion, half the gap. So, all right. What I'm rambling through right now, folks, is called commit criteria. I'm doing this for myself. You're getting the eavesdrop. If I didn't have a Zoom open right now, I'd be doing this solo. So let's do this. Let's go out to at least cover the potential attack. That would be May 7th. Let's give it a little bit of leash. Let's go May 7th is a Wednesday, like May 21st, May 21st, right there. 36 days. I'm placing a Tredge that's going to protect me against some madness for the next month. I like that. That's good. I learned today at Top Gun Options I can protect my stuff. Now let's do what I already did. Look at the money straddle. The S&P is currently priced at 54.27. And there's no 54.27 or 25 strike. Let me pick a different strike. Let's go to the regular May expiration. Okay. That was really quick. Let me slow down and explain it. The strike I picked only had $50 wide strikes. I don't want that. I went to the regular May expiration, which is the third Friday in May. A lot of people don't get this. Let me explain this. You see where it says, like right here, May 19, 25? Those options expire when? May 19, 25. How about the things in white? June 25, May 25. Those are called, when you just see a month and a year, at least on the E-Trade platform, it's 11/11, we are on the right path. That means the third Friday in May. 1, 2, 3. So the May 25 expiration is on May 16th. Do you understand? The June 25 expiration is on the third Friday in June, whatever it is. Do you understand this? Some other platforms will put May 16, 25. On E-Trade, it's this one. So does everybody get this? I always get like, hey, you're choosing the wrong expiration. No, I'm not. Listen, May 25 is May 16th. All right, long enough. Now we do have a 54.25 strike. Let's look at the money straddle like we did before. Let's go straddle May 25. Click, click, click. There it is. The PM. The AM ones expire at the opening bell that Friday morning. I'm just doing the regular ones. Holy shit. Look at this, folks. The money straddle is $312. You double that. Technically, that's half of it. That is I'm going to have to write all this down. Holy crap. So the options market is saying we could peak out at 57, and I go to the nearest 25 strike because I showed you it moves in 25. 57.50 to the top, and the bottom is 51.25. Wow. That is a $600 wide at the money straddle. You could drive a truck through there. Let's go. Now that I looked at the straddle, let's go look at it on the chart. The top was 57.50. Let's just draw a little line up here. 57.50 is what? Oh my God, look at that. It is literally the 200-day moving average. Isn't that funny? 57.50 is that red line. What's the bottom? 51.25. 51 right here in this chop. So the options market, not Wiz, I'm in the options market, but the options pricing rate now, based on that at the money straddle I showed you, is saying by May 16th, it's going to stay in that range. It can rip all over the place, but that is a huge at the money straddle. So I'm going to start building a Tredge, a trade that's going to act like a hedge. Let's put the roof on first. I don't think we're going to do this. Okay. So today I'm going to finish it tomorrow. to keep you coming back for more, let's at least start with the roof. And before I forget, you have got to join, folks, because that 5-year trade out into the future, if you did one contract at whatever it was, $1,500, you could potentially make $300,000 in 5 years. This is how the Warren Buffett, this is how the Wiz Buckley, I'm going to put me in the sentence with him. Because on a percentage return, I clearly don't have his money. I blow that guy away. We looked at a trade. Let me just go show you the strike. You can go all the way out into the future, folks. And we went as high as humanly possible. Let's go look. Excuse me. Look at this. There it is right there. We did a bull call spread at the 11,000, 12,000 strike. That's all I'm going to tell you. But if you did one contract, you are potentially $100,000 richer in the future. If what happens? The market, it goes up and to the right like it's always done. This time it's different. Okay. Let me deselect that strike. All right. I'm going to start with the roof, 5750, all the way out into the regular May expiration. And I got to sit here and scroll. It's like my going to a website and entering my birthday now. 5750. There's some premium in here. It's right on the edge. My minimum, ladies, here's part of one of my SOPs. For a credit spread, this bear call spread is a credit spread. My minimum is a 1 to 0.25. So it's right on the edge of my trade, but I'm going to go a little lower. Let's go down to the next 25 strike. Instead of 57.50, let's go down to 57.25 and see the premium there. This is more my speed. Okay. Let me just do one contract and one contract. $1.25. So I'm selling. I'm all the way putting a roof on here in the middle of May, folks. That's what I'm doing. I'm selling a May 25, 57.25 call. What if you're wrong, Wiz, and it keeps ripping? Well, I'm buying the upside call at 57.30. Double this right now. Write it down on your notepad, on your trade plan. $1.25, let's just say. Okay. $1.30 would be nice. I'm going to put in $1.30. That's 260. You write down on your trade plan 260, and you put the words maybe eject there. I don't know if we should definitely eject in the future. Hey, we got some tariff relief. It's really ripping. It's at my ejection point. And then Trump changed his mind and hit G with another tariff, and we're imploding. Remember, ladies and gentlemen, and we'll talk about this some other time or in the training, don't overtrade. Do not overtrade. Most of my trading, I set it and forget it. I'll talk through that as I keep building this trade. All right, so we have 260 written down. I'm going to try for $1.30. First place we look is where? Max potential loss. 370. If you do a single contract, you're risking 370 to make $1.30. That's a nice risk to reward ratio, $1.30. I like it. Same thing as the bull put spread. We make money 3 out of 4 ways. S&P goes down, we make money. It just hovers. Wiz, we're channeling sideways. You make money on a sideways. The S&P 500 can even go up as long as it stays below that point right there, which is our break even. The one way out of 4 we lose, rip. I've invited the mullahs and Xi Jinping to Mar-a-Lago. Peace on earth. No trade war. Everything's fantastic. The stock market will rip. I'll be happy. I'll lose money on this trade. All my longs will recover, right? So, and then obviously on this screen, I don't need to say it again, but I will say it on every trade that I place, 7, 8, 9. If you're looking at a 70, 80, 90% profit on the credit we take in, you close it. For a $100,000 model portfolio, 15 contracts will get you about $5,000 in risk to potentially make $2,000. Okay. With the S&P 5, I would do the 15 contracts, the 5 on this one. I throttled back my risk a little on CBOE. Why? First of all, it is a volatile market, Wiz, but it's an earnings trade. So notice that this little nuance here. With this, I'm pretty I'm pretty Doc Holiday with the S&P 500 trades. I'd be okay with the 15 contracts for the model portfolio of risking no more than 5. Some other trades, I throttle back my risk to that 3%. I'm sorry, I'm not ignoring your questions. I'm just on a roll here. And again, you're seeing live why we don't take a lot of new members, because I don't like a Battle of Britain in the chat box. SPX was today's date, 4/15. So, folks, this is the top of the Tredge. You need to tune in tomorrow for me to show you the bottom of the Tredge, okay? This is the top, but we're going to take the money that we're getting paid to do this trade, and we're going to use it to buy some lower insurance. I'm cheap, man. I'm having somebody else fund our hedge. Does everybody understand that? We're getting paid today to do this trade. Tomorrow, I'm going to show you how I'm going to take that payment and buy some downside protection. Okay. New May SPX, May 25, legging into bearish Tredge. Okay. Legging means what? I placed this leg today. I'm going to place the other one tomorrow. It's called legging into a position at everyone. So the hunters in my lifetime get the trade. I will add the screenshots. I'm glad I haven't been sniping. We're in a hover right now. Oops, sorry. Add image. Right there. All right. I said that. Posted lifetime. Even though the lifetime gets the hunters alert, I still posted in the thread, obviously. New SPX May 25, legging into bearish Tredge. The bear put spread I will cover tomorrow. I have to type something in here. It doesn't let you just load images, so I have to type some text in there. The other text was at everyone. So just giving you a little instructor why a little bit of difference. And publish. All right. I'll go an hour and a half. We got 8 minutes. I'll give you the link. It's right here, folks. That's the replay. Here it is. I'm liking the S&P right now for maybe a bull put spread for today at 54.25, 54.20 bull put spread. All right, here we go. Let me scroll up and get some questions here. Wiz, this is a bear call spread. Yep, I already said that. No. I will not place a bull put spread tomorrow. I will place a bear put spread. This is a Tredge in case the market goes down. Ain't nothing bullish about the bear call spread I just placed or the bear put spread tomorrow. If you don't have a claim, exactly, Rick. That's exactly right, Mike. These hedge funds, they crack me up. They're not, in fact, hedge. Did you send the replay of yesterday's session? I did not get it. I did. I sent out an email. Alan, make sure you haven't blacklisted Top Gun options in your email. I sent out an email with the replay yesterday, but here's the replay page. Right now, well, it won't be right now. We're still in the live trade brief. In about an hour, I'll post the replay. Sorry, on this page. Okay. Let me keep scrolling up. Jeff with a nice sniper, man. I love it. Donna, I forget when they're doing that. Just Google it. Go to the CBOE.com. You can read all about that stuff. Bruce, so great question. And maybe Sandeep was thinking about that. When I showed you the S&P 500 strikes, it depends on your strategic mindset. You could do a very wide iron condor on the S&P 500. That ain't a bad idea. I'll write that down and we can cover that tomorrow. That isn't my strategic mindset. Let me go back to the S&P 500 real quick. I love this question. Very good question. This is me, folks. You are an independent as an F-18 instructor pilot, man, I'm training you to be a single seat fighter pilot. I'm training you to be a single seat trader. If you looked at this and said, Wiz, that, and what was it, 5125? And that to me, Wiz, looks like an iron condor. If you're sitting here going, I have no idea what the hell an iron condor is, just hang with me for a second. It's a range bound trade, meaning this is a football field. There's your expiration. S&P can run all over the football field with the trade called an iron condor. If it doesn't step out of bounds and stays between the roof and the basement, you make a max profit. That's called an iron condor. I think that's Options Weapons School Session 5 training. If you think, and I don't dislike that trade, man, I think that's actually a pretty decent call. Me, if you listened to my commit criteria, I said war with Iran, China double broadsides us, Trump changes his mind. Remember, did you hear the clown car over the weekend? Lutnick. No, that's just a temporary this. And no. These things still go up in about 3 weeks. And I'm like, okay, now I'm confused. I was placing a Tredge because implosion, bounce, super implosion, super bounce, implosion. The Tredge is if you believe we're having another leg down. This is what makes a market, folks. Wiz, that's dumb. Okay, then do the exact opposite of the Tredge. Do a bullish double vertical, it's called. But great question. I like the way you're thinking. I think we're out of the woods, Wiz. I think things are settling. Okay. And we're gonna hang in a range until we get some more clarity. I love it. That could be your commit criteria for an iron condor. I can cover that trade tomorrow. I wanted to lead with the Tredge because there are people reaching out like, can you show me how to protect my portfolio? Yeah. So that's what today's training was. But I like the way you are thinking. Well done, Barry. Mike, I got to email that out, the trade plan. My techie and my marketing people are putting it, or can I do this? You know what? I think I can do this. Hold on. Yes, stand by. Oh my God. See, my apologies, folks. We had go to a webinar last week, and now I am in a new trading platform. Oh, I love this. Desktop. Wait, where's my computer? TGO. I'm going to do it. This is awesome. Everybody, nobody go anywhere. I'm not going to email it out. I'm going to give it to you right now. So one page. Can I select? No, it can only be one at a time. So there's one. Oh, look at that. Let me give you another one. Your computer. Combat trade plan. Let me give you the long trade plan. And then the SOP. I shouldn't give you that because you are free people. I'm a nice guy. Everybody's seeing these. Everybody getting these. You're welcome. Download them. I could do that. Yay. Wiz, can you do a Tredge on a synthetic Amazon trade? Absolutely, Joe. If you think it's going down, if you think Amazon's going to keep going down, you can absolutely do a Tredge to protect your Amazon. Yep. Let me see any other ones I want to give you. The 9-line combat trade plan. The wheel tactic is pretty good. No, I won't give you that one. It's going to confuse it. Everybody see all these? I know my screen is frozen. I was uploading stuff. In the chat box, folks. It's in the chat. It ain't on the screen. Yay. It's in the chat here, folks, or somewhere. People are seeing it. Vicky, I don't know what to tell you. People are seeing it. I'm as new as you are, Vicky. I just uploaded them in the chat area here. I don't know where they pop up. Okay. All right, ladies and gentlemen, I got 1 minute left. The replay is going to be posted on the replay page. I think we're down to about 15. I'm not taking more than the next 15 people. Thursday, if you want to join Solo Amazon, I can let a bunch of people in Solo Amazon because it's the gateway service. I don't mind the Battle of Britain in there. It's time for you to go though. It's day 2 of full throttle training, um, and covered 2 snipers yesterday. That $4,600. We got our long-term bullish position on Amazon. We're legging into a Tredge. Most people wouldn't even done what I did yesterday. Okay, so I'm really excited to open the doors to more folks who need help right now. If you didn't realize that you could have been making money as all this was going on, like we have been, I hope I'm helping you out here. And we'll talk about that tomorrow. We'll put the bottom in our Tredge, but we'll also talk about, you know what, Wiz, I don't think we're going to implode. I want to see what that iron condor is like. Okay. Psychedelics. We're going to talk about tomorrow, but have you seen Cybin? Cybin is up 50% in 5 days. It's up another percent today. Look at that. From $5 to $8. 50% move in Cybin. Buy Cybin with both hands. If you don't know what it is, you will tomorrow. Me too. All right, guys, good stuff. Let's grab your slots, man, or I'm closing the doors. I'll get the replay posted here shortly. Okay. All right, folks. Will the Tredge have 20? I got to go, guys. I went way too long, and this is why I limit my membership. I want about 100 people in here, not thousands. So I'll answer further questions tomorrow. All right, I got to go. Got a busy day. I don't sit here all day and trade, folks. I should be gone by now. I want to go to the gym. I want to do some yoga, go to the beach. I don't. We only do this a little bit and gone. I don't do this full time. I'd rather get my teeth drilled. All right, guys. Good stuff. Another great brief. Just ask me. Have a great rest of your day. Fights on. Namaste and basi. Wiz out. I'll see you guys tomorrow. Or I'll see you over in the Hunters after you join. Cheers.